Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I are going to turn our attention back to the markets. We want to bring you up to date on some of the developments there. You know, when we talk about indice returns so far this year around the globe, the numbers are negative and pretty dismal, really, Kris, overall. The one major market that we follow that was in positive territory, which is the Dow Jones, is now slightly negative, and all the other major markets around the world, as I said, that we follow are all in negative territory. Pretty indicative of sentiment. The similar sort of themes that overlaying this, Kris, are the euro issues and as well as some issues in the US. Why don't we start with the latest developments out of the euro?
Sure. Well, recently we've been talking about corporate earnings in the last quarter, but the markets have really been focused on the macro data and talking about macro data. Looking in Italy and Spain recently, there was elections there, new governments put in place. The leaders of those governments, more technical in nature, probably going to be less driven by the political motivation, I suppose, and more driven by implementing austerity measures and getting things back on track from an economic perspective. We've seen rising rates in France most recently, so their borrowing costs are rising, and there's some concern we could see potential downgrades to France's credit rating going forward from the current AAA. And the European Central Bank has been trying to bolster things a little bit by out buying bonds in the open market, and that's been helping to some degree, but still rates are quite high.
Right. Kris, when we turn to what's happening in the States right now, there's some interesting economic data points that we're starting to see in print. For instance, we had a fairly decent jobs report quite recently. As well, we've seen building permits slightly on the uprise, and we've seen manufacturing numbers improve as well as consumer spending numbers improve. Now, you know, what this tells me is that the momentum leading into the second half of the year of 2011, so we're going to finish this year with greater economic momentum than we started the year, and I think it speaks to the resilience of the U.S. market. Now, having said that, we're still cautious on the developments down there, and I think you have to be. They have their own set of political challenges down there. The Super Committee recently accomplished absolutely nothing after getting a lot of headline news, but I don't think there was a great expectation there that much was going to happen. Kind of leads me to the conclusion that we're not really on the cusp of a recession down there. At least the data points don't tell us that. What we really have is a sentiment recession, you know, and sentiment drives the day, certainly now in the current markets. But why don't we turn to what should somebody be doing here?
Well, you're right. In terms of sentiment, it's been really, really weak, and that's driven down prices of stocks and other assets. So that actually creates a bit of an opportunity. We think people should be focusing on yield. Growth, as we know, is going to be tough to come by over the next 3, maybe 5 years. And so yield and dividend income, interest income will be an important part of portfolio returns going forward. So we think you should be really looking at that. Patience is going to be a key, and maintain balance in your overall portfolio. The best performing asset classes in the last while have still been corporate and high yield bonds, as well as high yielding equity, and stick with defensive names, good quality names that have had a history of raising dividends over time. Talk to your advisor about some of these things and how they might fit into your portfolio. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. Kris and I are going to continue our discussion around the various dynamics in the capital markets. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.